afternoon and welcome to BizTech's Asian Midday Market Watch. It's July the 19th, and with our special feature on Singapore REITs, S REITs, and how they've performed, we've got Lee Kian Soon, CEO of Astral Asset Management, as our guest today. Now, Kian Soon, welcome to the show.
Good afternoon.
Now, Kian Soon, before we get your insights and delve into the world of S REITs, let's take a look and see how markets across the region have performed today. First of all, Bursa Malaysia is closed for a public holiday. So we start with the SGX, that is at up 0.4%. Looking across to other markets in the region, Shanghai is down 0.27%. ASX All Ordinaries is up 0.52%. The Nikkei is up 86%. The Hang Seng is down 1.28%. And rounding up the numbers, we've got the Kospi, which is down 0.14%. Kian Soon, it's a pretty mixed market. Tell us why.
I think it's a mixed bag. If you look at Hong Kong, China, I think the concern is, continuous on the fact that the China slowdown. So we could see there's a decline in their share performance these few days. I think for the rest of the market, it's pretty flattish.
Now, Kian Soon, we want to talk about specifically today S REITs. And perhaps you can give us a perspective of S REITs in terms of their performance so far in the first half of the year and also recovering from the pandemic to now a period of high interest rates and higher gearing ratios.
I think S REITs has always been a preferred sort of, even called a asset class by many in Singapore as well as this region, because every investor see it as a stable dividend income sort of investment. Very boring, but you get your 4 to 5% or even higher kind of dividend income once every year, and so it has always been well liked by investors. But I think in recent times the performance has actually been very disappointing. We see that the S REIT index has declined by more than 18% or even more for some of the REITs since 2021. And as you mentioned, right, initially there was a concern about pandemic because a lot of the malls were closed, a lot of offices was not allowed to operate. But in 2021, we actually see a recovery when the reopening happens. 2022, more reopening. So by right, there shouldn't be much of a concern in terms of the rental incomes coming in. But what really hits all the Singapore REITs and is because of the high interest rates. The rising interest rates spiked in 2022. A lot of these REITs actually are highly geared. They borrowed money, and hence the financial cost has actually increased significantly. And as a result, they have to pay more interest. And a lot of these REITs have two issues. One of them is on floating rates, which means they are not shielded from the rising interest rates. Secondly, is they have very high income, very high gearing ratio in the first place, and there's a covenant, that states that there's a limit to these gearing ratios.
So here's a conundrum, isn't it? On one hand, they have borrowed money in an area of cheap money, and giving investors 4 to 5%, as you said, or slightly higher, was a good thing. Investors would buy that. Now you can basically get pretty much that on a risk-free basis from certain bonds, Singapore government bonds being one example of that. So they're hit on both sides, isn't it?
That's correct. And once the interest rates started to rise, investors actually have more choices, right? So the 4 to 5% that Singapore REITs used to offer to investors no longer seems as attractive as before. And as a result, a lot of investors withdrew the money from the REITs and power it on as you mentioned, fixed deposits, MAS T-bills, as well as Singapore government bonds. That creates more selling pressure for the REITs. And what I'm seeing now is there's another kind of pressure that potentially is lurking around. And we have already seen it in S REITs that have overseas assets. If you look at some of the REITs that owns US assets, like the commercial properties, there is already a significant markdown in terms of the asset prices. And with this challenge, it creates even more pressure for these REITs because they will have breach covenants, loan covenants, because with the markdown asset prices, they potentially have hit certain ratios that have exceeded those acceptable limits, and hence they are forced to do a couple of things. One is they have to dispose the assets. Secondly is they would actually needs to do more rights issues, and all these measures I mentioned are actually not favorable for investors, because if they do a rights issue and you are not participating in it, you decided not to partake in it, you will have your dividend cut again, right? And
Correct. It's dilutive to the investors.
That's correct. The stronger ones actually take preemptive measures. I would say not all REITs are similar. The stronger REITs definitely have done their rights issue earlier. They have also make efforts to reduce their gearing ratio to an acceptable level, and so everybody is seeing what's the situation, because in general I think the performance of these REITs are inversely correlated to interest rates, and once there are news that interest rates have reached its peak and interest rate inflation is under control, I think the REITs performance will improve.
But one of the things you've alluded to, Kian Soon, which I think many investors are not cognizant of in our part of the world, is the fact that there is almost panic setting in the commercial real estate space in the US. So in some markets, occupancy is literally in the office space, in the office subsector, is something like 20% already. So the asset prices will have to be severely marked down, and that's going to have quite a ripple effect on, as you mentioned earlier.
Yes, that's why I said if you take a look at the S REITs that have assets overseas, this is already happening. I think the fact is in Singapore, our occupancy rate has been very stable, at least for the commercial side. And that's why we're not seeing, a big reduction in terms of valuation of commercial assets. But, based on what we just discussed, if there is a reduction in vacancy, and if, you have a recession and negative economic news, it's very likely that the commercial assets valuation will be marked down, and you will set off another cycle where you need to either do more fundraising, or you need to reduce your gearing ratios.
Then, looking ahead, what's the outlook that for this sector, and where should we be then putting our money?
I think for this sector, the outlook is really making sure that the interest rate have peaked before going in. I think from the peak on 2021, we are talking about a 15 to 20% reduction in prices. So it might seem very attractive. Certain industrial REITs have actually yielded 7 to 8%, but not without any reasons, right? Based on what we have discussed. So investors on the side, investors who are in for the long term, they stay invested. I think that's fine, because ultimately interest rates will come down to a more moderate level, and these REITs, the concerns that is circling around the S REITs will be gone. And if you're looking for the best timing and all this, ultimately I think is when the interest rate starts to peak and starts to decline. I think the REITs performance will improve.
On that note, Kian Soon, thanks for your insight. Thank you for coming on the show.
You're most welcome.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management out of Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.